Imagine running multiple projects at once, moving money between companies, and trying to keep up with business expenses. Now imagine years later, the CRA comes knocking, claiming you underreported tens of thousands of dollars each year, adding penalties and even reopening old tax years you thought were closed. That's exactly what happened in the case of Caroni versus the King. Hi, I'm Amandeep Singh, CPA, and today we'll look at this Tax Code of Canada decision that highlights how disorganized books and incomplete records can trigger years of stress with the CRA. David Caroni was an entrepreneur who moved from France to Canada. He had built a successful tech business overseas, then shifted into construction and manufacturing here. He set up companies, borrowed large sums from his mother in France, advanced money into projects, and even had a home building venture. But between 2010 and 2014, his businesses were unfortunately not profitable. Despite that, the CRA noticed that he was living with significant personal expenses, moving large sums through shareholder loan accounts and reporting very little to no taxable income. So, of course, the CRA launched what is called the net worth audit. That means instead of relying only on tax returns, they compared lifestyle, bank deposits, credit card spending, and business records to estimate how much income he must have had. The numbers showed discrepancy of $50,000 or more each year, and in 2014, CRA said it was over $134,000. They reassessed 5 years, even though those years were normally statute-barred, and applied gross negligence penalties. In court, the judge looked carefully each year. For 2012, the assessment stood because personal credit cards were paid by the company without proper shareholder loan adjustments. For 2013, however, the court ruled that in Caroni's favor, the CRA's method overstated income by $200,000, so that year's reassessment was completely thrown out. For 2014, the reassessment was reduced, cutting the supposed unreported income nearly in half. And importantly, most of the gross negligence penalties were vacated, except for 2012. The message from this is clear. Poor record keeping and mixing personal and business finances gave CRA the opening to assess unreported income and extend the audit into years that should have been closed. Even though Caroni won some ground in court, the process was long, stressful, and costly. At Cloudriver CPAs, we help business owners avoid this exact nightmare. With proper bookkeeping, clear shareholder loan tracking, and proactive tax planning, you don't leave gaps that the CRA can exploit. We also guide you on separating personal and business transactions so your records stand up in an audit. If you are a business owner juggling multiple projects, multiple deadlines, don't wait for a CRA to do net worth analysis on you. Let's make sure your books are clean, your loans are documented, and your taxes are filed with confidence. Thanks for watching, and I'll see you in my next video. Until then, bye.